Great.
So I have Aaron Zazara?
Zazera, or if you go
Zara.
the real Italian way, Zazera.
What's funny is I've been using your company for years and I've never actually clarified that. So that's the funny part about this.
Ah,
So Aaron Zazera, he is a graduate of San Diego State University. He has a bachelor's in business management. He spent 11 years with Geico doing corporate management, spread between both customer service, sales, operations, underwriting, across the board experience. With 5.5 years owner of his current company which is Zaz Insurance. 3.5 years operated as a captive through Geico, and 2+ years as an independent insurance agency. I have been introduced to him through several people, or in particular, through someone who worked with him for a very long time. I said, "Look, I need someone who can explain to all of our members what we need, what the current climate is, how we can navigate this." And every single time it was, "No, go talk to Aaron." So, Aaron, we are privileged and honored to have you here, and the floor is yours.
awesome. Thanks so much, Mike, and appreciate the opportunity to talk to all of you. This is, as we were kind of joking around, I've been in the industry for 16 years now, and the last two, 10, 20, 30 times fold what I've been asked to as far as speak to groups, a lot of realtors, a lot of lenders, and just kind of what you started talking about. What's going on in the insurance environment? What are some things that are our biggest hurdles, and kind of how to overcome some of these things. And oftentimes, to be honest with you, and I don't want to spoiler alert, is education. Is just knowing, because sometimes the end result is inevitable, but kind of navigating and educating your customers and those that you're working with, and even yourself, is the best thing. So I'm gonna jump into. I've got about 20 slides. My experience in these things is the best environment is going to be one that has a lot of questions, and is unique to you all. So I would encourage, even as questions come, feel free to lob them to me if they feel particular to the slide or the topic that we're on. Go ahead, Mike. You got your finger
Just
up.
to let you know, just so everyone knows, so I'm going to be monitoring the chat window. And if you do have any question, feel free to put it in there or raise your hand, and then I'll go ahead and get Aaron's attention. Otherwise, we'll just do questions at the end too.
Yep. Yeah. And my hope is to be 20 minutes on presenting at most, and then leave plenty of time for questions. And that's typically, and I've seen in these presentations that I've done both in person and through Zoom, that's where we get the biggest bang for our buck, and people walk away feeling educated. I'm a personable guy. Let me see if I can get these slides clicking. My screen is frozen. There we go. So I want to tell you guys a little bit more about me personally. These Zoom calls we all learned back in 5 years ago. I think yesterday was the anniversary of kind of when things started to change dramatically. Is they can be not as personable. So do my best to make it. A little bit about me. I'm California through and through. Grew up in Sacramento, moved to San Diego in 2005, as Mike told you guys. Graduate of San Diego State. Married with 2 kids. Total joy in my life. Everything I do is around the 3 people that are next to me in these pictures. I love to travel. Love sports. A lot of my affiliations are in Northern California, even though I've been here now more than I've been up there. Still loyal to my teams. And insurance is my professional life. That's what I know. Whether it's on the underwriting, selling, servicing, commercial, personal lines, that is what I do. A little bit about my team. This is my leadership team: Marwa on the left, and Jerica on the right. Between the 3 of us, we make up 40 years of experience. As Mike said, spent 10+ years with Geico Corporate, and then since then I've owned my individual agency where we service and sell property policies. We're property centric. We do a lot of other things, but today we're going to talk about property, and that is our bread and butter. So without further ado, I'll start talking into the topic. So I talked about questions and being engaged. My presentation really is centered around some of the most common questions that I get as an insurance broker, as it relates to from realtors, and even you can throw in lenders kind of in the similar category as far as the relationships that we build and the people that we work with. So just wanted to give a core basis on how is your property policy or your client's property policy structured? What does it cover? I'll talk a little bit about coverages, a little bit about what's covered, what's not covered, and then we'll jump into the industry. So this is a declaration page. If I was writing with one of my carriers that has what I call the core coverages, the main thing that is covered on the home is the dwelling itself. And this is attached structures, can be garages, can be other items, but usually you're looking at the core home. An ADU, if it's attached to it, that's part of it, but that is what's covered on dwelling coverage. And it's designed to cover the replacement cost of it, not the market value. So we get a lot of questions. Let's say this was a 3,000 square foot house, and they'd say, or that wouldn't be likely with $220,000 worth of coverage. Let's say, 800 square foot house. And they'd say, well, the market value is, $1 million. We're in La Jolla. I couldn't believe it. It would only be covered for 220,000. And that's because it's the cost to replace it. So if it burned down today, what would be the labor and part cost to rebuild it? Additionally, on every insurance policy are the following three coverages. They're typically a multiplier of the dwelling coverage, so a percentage or a factor. So other structures, that's anything detached that comes with a standard home policy. You're looking at sheds, you're looking at fences, you're looking at pools. The next coverage would be personal property. So that's all your stuff that's in the home. That's going to be electronics, furniture, clothing, tools, can be a lot of things, but basically the way I like to think about it is if I had the strength to pick up the house and lift it up, everything that's left is going to be factored into personal property. And the last core coverage is going to be loss of use. So if you're not able to be in your home, let's say you have a one-story home, big kitchen flood, pipe bursts, or pipe leaks, and it floods everywhere because you're away from home for a few days, can't live in it. The coverage to where you're going to live and the food is covered typically as part of your insurance policy up to the limits of your policy. The last coverage I'll highlight here is your personal liability, which typically, and I say typically because every insurance policy is a standard form policy, home insurance policy, but a lot of carriers have deviations or exclusions, and we will cover some of that in the next two slides. But that's why I'll use the word typically, is that I can't say absolutely without looking at a policy. But personal liability will typically cover you in your home and outside your home for injuries you're negligible for. So oftentimes like a slip and fall, a dog bite, are some common occurrences that we see. Limits start typically around 100,000 up to about $1 million on a personal property policy. And this is what makes a home policy. This is okay. So before we get into, so what are some things that are covered and some of the things that are not covered, I'm going to talk about what are the key characteristics considered for pricing and underwriting. So there is your home policy, but there's a price that comes with it and an eligibility that comes with it. What are the insurance carriers mainly considering when they're trying to factor in, can we write this and what will we write this for? What's the price? These are the four main things. Cost to rebuild, talked about that. It's not the market value, it's the cost to construct the home, the parts and the labor. The age of the home, often more times considered on more of underwriting, meaning can a carrier write it or can it not? A lot of times over 100 years they can't, they'll say. There are things that will factor pricing, like the age of the roof would give you a credit or a discount. If you had all copper plumbing, would give you a discount. But mainly age of home is going to be an underwriting factor of can they write it or can they not. Claims history, and that's both with the claims that you've had as the customer, no matter where the home is, what your property claims are, and potentially what are the claims with this given property. So oftentimes we get realtors that say, man, we're running into issues. There was a claim in 2023 with the seller. That is something that carriers factor in because it's the DNA as part of the home. Even with someone new moving into it, it's a consideration with underwriting and pricing. And the last and probably the biggest hurdle we run into today is location. Location specifically right now, brush fire area risk. A home in Lake Tahoe on the California side is going to have a tougher time to insure than a home in Citrus Heights, California, and Sacramento area when it relates to brush fire. Same thing with, you think of Oakland Hills and San Francisco. They're just very, very, very different areas, and factored in as far as underwriting and eligibility. Next slide, Mike, I see you popping up. You're muted. I got a hand though. Mike, you're muted.
You love when that happens. So I have a question, only because I actually recently dealt with this in Orange County,
Yep.
where we had a lot of policies that were delayed, and you bring up location. So I know because of all the fires that had happened, obviously that was in LA, but they had said no, 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 no. And I had heard a rumor that a lot of things were stalled based on proximity, just because of a lot of things. Was there any truth to that or anything like that? Or like, I guess, is there a distance, I guess you could say, because I know they do the maps and all that, but still, that's something I
Yeah.
was hearing.
Yeah, so during the fires, we ran into a lot of issues really January to probably end of February, where a lot of our carriers did a blanket of we will not write anything in LA County, Orange County, Riverside County. And it even bled itself into San Diego County with the fire in South Bay, towards the border. So yeah, I mean, that is one of the challenges when something like that happens, is that they will take like a one size fit all approach. We had some solutions, but the solutions when customers were walking in the door for finding home insurance during that time versus today were far more challenging. So that does happen. Did that answer your question, Mike?
It does. So
Okay.
now I'm hoping that's no longer in effect. Those things have kind of normalized, and generally, in your
Yeah.
opinion, just for other reference, because unfortunately, I'm sure we're still going to see stuff like this happen at times. What generally you think is like the timeline for things to kind of simmer down? Do you have any way to say that?
Yeah, I mean, you can, if you like Google during any times during the fire, there's an organization that'll have like a containment of the fire. Oftentimes they want to see like 90% to 100% containment. If they are blocking out, they're saying, hey, we won't write in this county. More times than not, what happens is we'll get these fires when they're on the smaller scale. Those fires were very big compared to what we're used to, and they'll do a containment requirement on a specific zip code or a subset of zip codes. And that usually it is, we want to see the fire 100% contained, or we won't take any business from that zip code. Now, to be honest with you, in all those situations, the zip codes where the fires are happening, we were completely limited. There was nothing we could offer. But there were LA County carriers that were in a few, in pockets of areas that were willing to take business. Same thing with San Diego County. We were able to write away from kind of the South Bay. So I think it's just more of like preparation, and then also with your clients, like making quick decisions. We had clients that were saying, hey, we're going to wait it out, we're going to see. And then because of the fires, they had no options, and they had to wait till the fires were completely contained to close on insurance, which is a tough situation.
Very good. Thank you.
Yeah, absolutely. And I appreciate the good timing of the question. So some things that are commonly covered, weather, so hail, lightning, typically, an act of God, something sudden and accidental are covered. These are some of the common things we see. Fire. I've never had more questions on, is a wildfire covered? Do I have fire insurance? Fire insurance is part of home insurance. Our agency does not write an insurance policy without fire coverage, both for a small kitchen fire and for a wildfire. There are situations where people do have to get the California Fair Plan, which makes up two policies, the California Fair Plan, and then what's called the difference in conditions policy, which covers everything the California Fair Plan doesn't. But I think a lot of the confusion we got was customers saying, hey, I don't have that Cal Fair Plan fire policy. Well, the Cal Fair Plan is really the policy of last resort. If you cannot get standard home insurance, you go to the California Fair Plan. So your standard home policy does cover wildfire. Now, obviously, there are deviations to that on deductibles and different things. But I'll just reiterate, our agency in the 5 years we've been in existence and the 10 years that I spent at Geico, we just don't write a policy that doesn't cover fire. It's not, I can't say without a doubt, there's not something that exists there that excludes it. But it's something that's covered. Theft is also covered. So just kind of some common things, some things that aren't covered, things to be really aware of, and something we talk to every customer that buys a home insurance policy with us. We talk to them about this. Doesn't cover natural flood. This isn't like I just talked about. lightning, hail, like all those things would be covered because it could cause damage to the roof or could cause damage to the structure. But if the pooling of water created damage, meaning it flooded, and there's a level set of water that's pooling in the home or pooling around the home, that's not covered, and that's a standard home exclusion. We don't run into that a lot in California. You can buy separate flood insurance. Typically, you're going to be required to buy flood insurance by a lender if you're financing, if you're in a flood zone, but it's not covered on home insurance. Same thing with earthquake coverage. Earthquake is excluded on all home policies. A lot of policies you can add an endorsement with it, or you can get a separate policy. And then the last thing we run into a lot questions and we talk about is wear and tear. So it's why newer homes are favorable, or like a new roof is favorable, as the wear and tear is less likely. But the reality is insurance carriers are not gonna cover something that has happened because of time. So again, yes, if there's lightning or if there's flood, not flooding, if the like think of like a hailstorm, that's more likely to suddenly damage your roof. That wouldn't be considered wear and tear. But over time, there's let's say the roof is leaking, a little bit different. So things that are covered, things that are not covered. So now I want to jump into the insurance environment. So what we went over was kind of like a ground level view, what you're dealing on a daily basis. I'd call this more like a 10,000 foot view of the industry and what's going on. I can talk about this for hours, so I will try to be succinct in how I communicate this.
Just him stalling, or is it me?
What?
It was stalling on my end. I didn't know if that was happening for everybody. Okay.
Sorry. Keep me updated, Mike, if that changes.
Sorry about that. I just want to make sure, because I came in and it was fine, so I wasn't sure.
No, please keep me updated. Sorry about that. So talking about the insurance industry and shopping for insurances, shopping for home insurance, which we all run into a lot, is this, to me, this is a path of what we're used to. It's what I'm used to for the first 12, 13 years I was in insurance. You need an insurance quote, a dime a dozen. You can call 1-800 number, you can go online, you can call every agent in the area, and everybody's going to have an option for you. There's roads to be traveled and paths to go. I think where we are today is a very different road, and this is one that is very limited. Options are not timely. So even when you have limited options, they're not, I can get a quote in 5 minutes with every scenario. Most scenarios are taking a bit longer. I can't go online typically and find a quote. 1-800 numbers are more likely to tell me I can't, and local agents may even not be able to help, even though they know the area very well. So why? I think this is the key question. And I think the cool thing about, I wouldn't say anything cool about the word challenge or the challenges, but I'd say this has gone on for the last couple of years where this is more common knowledge. But there are a few contributing factors as far as the challenge. And first, I want everybody to think about insurance as a business, because that's what it is. These are private insurance companies that are trying to make a profit and selling the pooling of risk, meaning they're taking in everybody together and taking on some risk themselves and ultimately making a profit. And the healthy profit is they can charge a reasonable rate where customers have something competitive and are choosing to go with them, but are ultimately able to make a profit. So keep that in mind as I talk about this. So insurance companies, their biggest cost is claims, and the increasing of claims has occurred over the last few years. So wildfires is the easiest basis. I'll tell you, this is a slide that I've referenced prior to the LA fires, prior to the South Bay fire. We have had quite a few natural disasters, and in California specific to fires in the last 5 years, far more dramatic than the prior 20 years. Age of homes are aging in California. Yeah, that's second nature, but they're kind of getting that sweet spot where plumbing is aging, pipes are bursting. Our state is becoming a little bit more litigious, so people are suing for different things and holding people responsible for what they would say they're negligible for a slip and fall, etc., which has increased the amount of claims that are happening. So that's the frequency of claims. And then when you think about the severity or the cost of claims, one of the biggest things that plays into that is, okay, there's a fire, then the insurance carrier has a responsibility to rebuild the home, has a responsibility to repair the kitchen when there's a pipe burst. And when you think about the cost for our realtors, and for those, most of you probably have dealt with a situation. It's like someone's renovating their home or you're doing something yourself over the last 5 years. If you think about the cost of where it was and where it would be, it's dramatically different. I think about something, I got my deck done 7 years ago, and I just curiously got a bid and called the guy and asked what would it cost me, and if I wanted to completely reduce, remove it and do the same thing. I wanted to make it bigger, but it was 3 times the cost. 3 times the cost. So the insurance carriers are dealing with that, is to repair or replace the home, the costs are increasing. So if costs are increasing, I think the analogy I like to think about is in a business is, if you were running a hot dog stand and you're responsible for selling hot dogs, and the buns went up in cost, and when you're going to buy them to sell them, and the hot dogs went up in cost, and the person that's selling the hot dogs and making the cost needed to make more money, what would you ultimately do to the cost of your hot dogs to your consumer? You'd increase them. You'd increase the cost of your hot dogs. And this is where, if you were to ask the insurance carriers why a lot of them, why a Travelers, why a Safeco, why a Nationwide, why an Allstate are not, why a Farmers are not writing insurance or incredibly limiting what they're writing, they'd say, we cannot charge the right rate or an adequate rate for the properties that we're insuring. And that goes to our regulatory environment. And so California has one of the most robust, but I'd say, well, not robust, I'd say one of the most stringent, and it's been good for the consumers. When you look at our insurance prices compared to all states, when you date back 3 years, it's some of the lowest in the country. So we have a consumer protection program, the Department of Insurance as well, that really holds the carriers accountable to make sure they are doing things in a way that is healthy for the consumers. But the carriers would say in these last few years, they haven't been able to adapt quick enough, and they haven't been able to adjust quick enough to make a healthy living. And therefore they're either not writing business or they're really restricting business. And so that's the standstill that we're at. There's a lot of conversation back and forth between the Department of Insurance as well as the insurance carriers on advancing or improving the information the carriers can use. I don't want to bore you, but things like predictive catastrophe modeling. Carriers would say, hey, this has been going on for years. It can be used in any other state but California. Why can't we use analytical data and information, predictive data, artificial intelligence to say, we want to use this data to price going forward? And the carrier would say, well, you need to use, or the Department of Insurance, up until recently, would say, you need to use historic data. That's the rules. That's what was in place with Prop 103. That's how we're going to do it. Same thing with reinsurance. It's one of the biggest costs for insurance carriers. They would say, you cannot use this. Carriers would say, this is a big bite in my apple and what I'm able to eat and what I'm able to profit on. So that's the reason for the standstill. Again, there's ongoing conversations with the Department of Insurance as well as insurance carriers. There were some things that went into place in December that were supposed to help, which I will tell you, based on our experience, has not been helpful. We don't have carriers opening back up. Our biggest carriers, like a Travelers, like a Safeco, like a Liberty Mutual, some carriers that we write with, State Farm's not writing homes right now, Allstate's not writing homes. So I do think we're kind of in this environment for the next 12 to 18 months until we where we have market, I would say market competition. That's what we want, and we don't have that right now. Next slides, and I'll pause for a second just in case there's any questions, because it's an overload of information. Okay. So I want to go to what are some of the most challenging property characteristics we run into. And this does go back to, if you think of the question, how do carriers underwrite and price? Well, these are a little bit more specificity on those things, on what makes a home more challenging. And we talked about location and the fire area, harder to insure in Rancho Santa Fe or Poway than it would be in Mission Valley, in portions of Mission Valley, I'd say. So location. The second is old homes. We run into a lot of challenges with homes that are older than 100 years. Specifically, knob and tube is a really big challenge. A knob and tube electric system is incredibly challenging. Galvanized pipes can limit what carriers will accept and allow us to write with. And so old homes also become challenging. High value homes. So this is, I'd say, high value homes and something that's not on here. Sometimes condos in that are not insured, that are not insuring the HOA. These are challenging situations. And then history of claims, both for the client and the home. And what I can tell you about these types of characteristics is, one of my pieces of advice is shop early, shop quickly. The moment you're hitting escrow with a property, the moment you need to enter into a conversation about finding insurance, it's part of now the requirements for a realtor to move forward in the transaction. But I would tell you, like, day one is the time to shop for insurance, and even more so with any of these characteristics that come into play. Mike, did you have a question?
I did. I was debating putting my hand up or wait until the end. So but I tried to interject it here because I actually got a text message on this one. I don't know what didn't go in the chat. What about, like, say, effective age? So say I've had an older home that's been completely remodeled, so the age is showing, say they left one wall, whatever, 1962, but it's actually
Sure.
effective as of 2022. How would that affect, and how would you put that in there? Or do they automatically see that?
I would say if it's been completely redone and it reads as such, then we're going to read it for the date it's the 2020 date. If a portion of the home's been redone, then it's going to be still 1962. But insurance carriers are going to factor in, it's got a new roof, it's got probably copper plumbing, multiple things that will help make it easier to insure, or ultimately provide better pricing.
Perfect. Very good. Thank you.
Okay. Yeah, thank you. Similar, and I didn't want to get too much just based on kind of the intro, Mike, you referenced like single family homes. I think I can't coin exactly how you said it, but I don't know if we have anybody that represents or works with commercial property. I wanted to have a few slides just to reference that I thought would be helpful, but to be honest with you, commercial property is pretty parallel to residential property and things that make things difficult to insure. I will just say the tightening or the strictness on it is worse or more challenging. Oftentimes, if we have a apartment building, it's something we do a lot of. If it hasn't been updated within the last 25 years with plumbing, roofing, electric, HVAC, and water heater, most carriers will say no. And you'll go from potentially having maybe a 0.5 factor per unit on like a thousand. So let's say it's 6 units, maybe $3,000 a year, to 6 units, more like $8,000 a year, 3 times the cost when you don't have things updated. So we have run into, I'd say, on the residential side, cost probably on a single family home, we're seeing 1.5, 2 times the cost to 2-3 years ago. For commercial properties, because of this slide right here, the age and things not being updated, a lot of it's electric and roof, to be honest with you. We see sometimes 3 times the cost. So how to communicate with your borrowers, buyers. I cannot stress it enough, is shop immediately. I think that really is the most important thing. And with that, the third bullet or third item, have someone you work with. And that's, I've given remnants of this presentation on multiple scenarios, and I'll always say this: we're not here to market ourselves. We really appreciate the opportunity to educate and help those align themselves with putting themselves in a better position and on a real estate transaction. You should have somebody local. You should have somebody that you work with, whether it's a agency owner or a sales rep at an agency, whether it's a captive agency, meaning it's an Allstate or a State Farm or a Farmers, or it's an independent agency. You should have a go-to. And we get a lot of people that will shotgun shop. they'll send it to 6 different places, and that's okay. You can still have a go-to with all 6 of those people, but the more you are massaging that relationship and have a go-to, the more fluid those conversations are going to be. Mike just talked about that question of like the effective date. It's like, if I had that home and I was the listing agent, I know that someone may ask questions about insurance as they come into that open house. I want to call my agent and say, hey, here are some of the characteristics of the home that I'm a little bit worried about with insurance. What are your thoughts? Hey, could we even get a quote? Maybe I know it's a listing. It's not my customer. Would you be able to put that forth with me? We can give you any of the information you need. The more, I'd say, local and consistent you are with your relationship, the more fluid those things are going to be. Those are not necessarily always easy things to get, and easy, I would say, to get in a timely manner. The second item, which is the only item I haven't covered, is work with your buyers to understand and your customers understand need versus want. There are some things you can do to help position yourself with a better price. There are optional coverages on home insurance policies. A lot of times you can either reduce coverages or exclude certain things, or increase coverages and include certain things to balance the price. This is typically not going to be something that changes the price from 4,000 to 1,000. But usually you could, if we say the average price of a home insurance policy is 3,000, you might be looking at 2,400 if you reduce some of the coverages, increase the deductible to put yourself in a better position with the DTI to move forward with the sale. Question. So and these last 2 slides were geared more towards.
We actually do have a question.
Yeah.
Sorry, I was trying to jump in on there. And I was trying to get a little clarification on it. So Gloria, you might want to jump in, but it says if the buyer has to complete major repairs on a 20-year home, it could affect the policy in a positive way. And I wanted to clarify. So if a buyer needs to complete and buying the property as is, would that affect the insurance maybe down the road too?
Yeah, and Mike, I'm not sure I understand the question. So the buyer needs to buy as is, and so what you're saying is there's certain things that are not done, that need to be done. Yeah, I mean, the more updated, the newer the home is, the better. I'll give you a couple examples that'll hopefully answer this question. We run into some issues recently where people are pushing through some pretty rough properties as owner occupied, and they're doing renovations. And then the inspector goes out, we insure it, we put it in a favorable position best we can. And then the inspector goes out on the home insurance policy and says, we can't insure this. There's major foundation issues, or the roof is clearly 50 years old, or there's structural issues. There's cracks, there's breaks. These are situations where it's best to try to get them done up front, but also know what you're working with. And if you have that healthy relationship with an insurance agent, disclosing some of the things you're worried about so you can put yourself in the best position long-term. Because what we've seen in some situations is we are not detailed. You can't necessarily see all this information online. And then you go in a situation where the policy's canceled, and the price or the difference on what's available could be 2-3 times. And so, yeah, you saved yourself at the close, but now you're in a position where it's like, man, I don't know if this insurance is affordable. So yeah, I mean, as is fine. I think just making sure you're aware. I mean, usually it's going to be electric, plumbing, and roofing are going to be some major things that if there's issues or clear to the eye, and maybe not on some pictures, but seeing the property in person, that could potentially cause some issues with a home insurance inspection. And the same goes if those updates are done. And this is kind of the other side of the coin. You will get a more favorable rate if the roof is updated within the last 10 years. You will potentially even get a more favorable carrier selection if the roof is updated within the last 10 years. And the same thing with plumbing redone or plumbing copper exclusively. That can be beneficial. So I hope that, Mike, I don't know if that answers the question.
I think it does. I don't know, Gloria, if you want to chime in and see if that answered that, but I believe it did.
Yes, it did. Both sides of the coin. Thank you.
Okay.
Awesome. You're very welcome. Thanks for the question.
I do have another question. It's a little off. It's about California Fair Plan. You want me to hold off till the end or jump in now?
Yeah, I've got 2 more slides that I'll jump through pretty
Let's
quickly.
wait until that, and then I'll ask these ones.
Okay, cool.
Okay.
So yeah, tips to avoid claims, and I'm going to blend this. This is a commercial slide, but this applies on the personal side. First and foremost, calling your insurance agent, calling your insurance carrier and saying, I have a small water leak. I want to consider getting an insurance claim, automatically shows up as a claim. So if you went to go sell your house in 3 years, they're going to see that happened, and they're going to underwrite and understand what happened. Calling someone like me and saying, hey, Aaron, I'm considering doing the claim. I have insurance with you. Can you talk me about the pros and cons of doing it? For me, it's I want to put you, I'm the broker. I put, and same thing with, I would say all agents is, we are going to try to put our customer in the best position and talk through, okay, what are the estimated damages? Could you have someone come out and look at it? Okay, what's your deductible? Okay, here's probably the increased cost you're looking at if you file a claim. Is this something you want to do? So first and foremost, I don't think claims necessarily want to be avoided. If your home's on fire and you need to replace something, you got to use it. If there's your kitchen pooled in water because it leaked and it's clear the floor's got to be redone, you got to call your claims team and get that claim done. I think just avoiding claims puts you in the best position to always get the best price on your insurance policy. And I would say first and foremost, maintain your property. If there's something wrong with it, do it the right way. Whether it's, I see this a lot with like plumbing and leaks, like small leaks will lead to big leaks. If you're doing like a tape job or something that's not in a healthy way, you're going to run into a bigger issue long term. And this is the same for commercial properties. Investing in security systems is going to reduce theft. It's going to reduce vandalism. We see the same on residential properties. And then the last I talked about is seeking local advice from your agent. Reducing insurance premium. So this is the need versus want. You can raise your deductibles, combining policies. So auto, home, this is less prevalent. Bundling is less prevalent today than it's ever been, because a lot of carriers that are writing auto are not writing home. A lot of carriers are writing home or not writing. A lot of carriers are writing auto, not writing home. A lot of carriers are writing home, not writing auto. But you can still try. There are carriers that say, hey, if you're with the same agent, we'll give you a credit, especially on the independent side. We have carriers that say, hey, if you're writing auto and home, you get a discount. So it's always worth exploring and having that conversation. Taking safety serious is more on the commercial side, and then seeking advice. So last slide, and then Mike, I'll kick it back to you. How should an effective insurance agent brokerage help your clients? So like what are reasonable expectations for people like me? And I think first and foremost is, you're going to take my money. You're going to sell me a policy. I also want the reciprocal servicing from when I need it. If I need help, if I need a change, I should be able to expect a clear line of communication on how to do this and how to get this done. And I think that's something any agency wants to pride themselves on, as it leads to retention. As you guys know, repeat customers or help you grow your empire. If you always had to go out and find new people and no one referred you, it would be bad business. So the same goes for us. I say options and adapting to overcome industry challenges. I think being able to have our clients who want them to be able to call and say, I've had 2 emails today, clients saying, hey, my rate went up at renewal. Insurance carriers are raising costs. What are some things I can do to reduce pricing? And being able, it kind of goes back to bullet 1, service, but being able to adapt to that. For us, it's being able to add carriers, as an independent agency, as Travelers and Safeco aren't writing, we're knocking on every door of every carrier that is what we consider A-rated or financially stable, that is still willing to write insurance. So we have options for our carriers. And I think the last is transparency. We talked about what is covered, what's not covered. Insurance is not as bulletproof as you think. It's not always seamless. Being able to talk through some of the things that aren't, lovable in situations, service situations, claim situations, contract situations. You want to be able to hold your agent accountable and have those conversations, so that you're clear in the situation that's going on and you're best suited for going forward. I think that is it. So I'll kick it back to you, Mike. You wanted to talk about Fair Plan.
Yeah, well, there's a question, and I want to put it open to anyone who wants to ask any questions at all. This one came over from Joanne. She said, are the insurance companies that are not issuing insurance willing to issue for personal property if the homeowner receives the California Fair Plan? And is that replacement cost a rider, or is it automatically part of the policy?
Good question. So two questions there. So with the California Fair Plan, there is coverage for, and California Fair Plan, no matter what agency you go, is standardized pricing. So if you went to Joe Smith down the street and the Allstate agency that writes Fair Plan specific, they're working in the same software, the same pricing, the same underwriting. The difference in pricing is what kind of coverages and deductibles do you have? The Fair Plan does cover personal property. The Fair Plan does cover detached other structures. The Fair Plan does cover the dwelling, but Fair Plan is one of the unique ones where when you get the dwelling, you don't necessarily get everything else. You have to add it. It's more of an a la carte. I would think of it like a buffet. You pick what you want versus like ordering the plate and it all coming with it. So you have to make sure. And so with the Fair Plan, what I would recommend is working with an agent saying, hey, I want it as close to as a home policy as it can be. What the Fair Plan doesn't cover is certain perils, usually water damage and liability, that have to be covered by a complementary policy, which is the difference in conditions or wraparound policy. So the Fair Plan just doesn't cover certain perils. So kind of to your question, Joanne, is there are carriers that will write that difference in conditions policies as part of the complementary of the Fair Plan. And there are carriers, you brought up a good point. There are some carriers, including the Fair Plan, where you can write replacement costs for your personal items or actual cash value. And that's something you would just want to request. I'd recommend to any agents, if they were coming to me for advice, is just defaulting to replacement cost on personal items, as that comes a difficult situation. If there's a claim and something does happen, people expect to get stuff replaced and not, hey, your TV's was $1,000 to buy, but it's now worth $400. We're going to give you $400. That's not appropriate coverage. So yes, it is very possible to get that. I would just make sure if you're running into a situation where you don't have that, asking for it. Not to say there are some situations it's like the Fair Plan may cover the personal property at replacement cost, but you may say, hey, there's only one carrier that'll write difference in conditions policy or wraparound, and they don't offer personal property. I haven't run into that, but that might be the case. So I can't say never, but I would just say make sure that that's your intention when you are shopping for insurance or working with a client to shop for insurance.
Okay, perfect. And then are there any other questions or anyone? I'm looking here in the chat if anyone wants to turn on their microphone or anything. If anyone would like to go in, then we can have a kind of an open session for anyone or some of the things you guys are seeing.
So this is Joanne again. I'm asking a lot of questions because I'm a housing counselor, right? And so we have the workshops, and part of what we do is we talk about the insurance. So that's why I'm trying to get some answers. So you just said something that just jumped out of my mind that I was going to ask a question on, and I forgot what it was. Maybe somebody else has a question and it comes to me.
Yeah, no problem, Joanne. And you can email me. So if you, I probably should have just clicked out of the slide and gone to the first one and not made everybody racing back. But you can shoot me an email. And this is kind of goes back to my emphasis on having someone local. We love to talk shop. I work with quite a few. Our business is exclusively referral based. So but we encourage people to call us with questions, with things that are going on, with situations. I'm not a team of one. So it's, sometimes it's me, sometimes it's my team. But I would encourage you to have someone there where you're at locally, where you can pick up the phone and as things come up or, weird scenarios, you can call or email, but you're welcome to email us and ask any questions that you have and kind of go from there.
Where are you located?
San Diego.
San Diego. Okay.
Yep. We do a lot of our business. I've got a lot of I grew up in Sacramento, so we do a lot of business there. We've got some referral partners. My wife's from Castro Valley, so we do a lot of business in East Bay kind of area. And we do a lot of business in Orange County, San Diego. So we're kind of all over the place, but yeah, our brick and mortar where our customers can walk in is San Diego.
Thank you.
Do you have clients all throughout the state and everything? Like, do you just do Zoom meetings with some of them or anything like that?
Yeah, we do Zoom. We've done Zoom meetings. We've worked on, I mean, we'll do whatever the client needs to put them in the best situation to feel satisfied with the service. So when I mean that is like, we'll do Zoom, we'll use WhatsApp. A lot of people, you know, that I find that more and more common. We'll do video, like a video presentation if we need to, like if we're covering a topic for like 2 minutes and we just need to record ourselves. So yeah, we kind of adjust to the customer basis, but I'd say the majority of our clients, we do a lot via email, and then usually a quick 3 to 5 minute conversation is kind of how we, I wouldn't say quick, but three to 10 minute conversation is kind of how we do our work.
Okay, perfect. So anyone else? Any other questions or anything? Comments? Well, I'll make sure contact it. Well, your contact info is up here for any email. If anyone needs Aaron's contact, you can reach out to myself, Yvette. Other than that, I guess, Aaron, thank you so much for doing this today and for being part of our Hour of Power. Oh, do you do mobile home insurance?
Right now, we do not. So, and I will tell you, it's just because we don't have the carriers necessary to do it. It's something we typically have done historically, but that's one of the harder areas to insure right now. So we do not offer mobile home insurance. So we typically will, that's a moving target. So 2 months ago, I would have told you yes. Right now, we do not.
Okay. So anyone else? All right, Aaron, thank you so much for coming down today. We really appreciate you sharing your knowledge with us and answering some of the questions and letting us know kind of how this works. And would love to have you back down again sometime if that works. So
yeah, anytime you guys need anything, I'm here to help. I really appreciate the opportunity, Mike, and Yvette's not here, but thanks so much for reaching out and thinking of me. It's a pleasure to be a part of the team here today.
Thank you. And then for everyone, thank you for taking a part in Hour of Power. And we will have our next session announced here shortly. And as always, it's a great time to be a realtist. So we'll talk to you all soon. Okay.